In the equity quadrant, taking a look at the June Nasdaq futures, which fell in back-to-back sessions, dropping yesterday by 1/3 of 1% and dropping today, so far at least, by over 1.5%. I say so far because there is a little bit of time left in the futures session and the Nasdaq is still down 1.56%. The low so far today is 21,107. That's down 1.59%. And the high today was 21,558.50. That was up 0.52%. As we hit the midpoint of the week, the Nasdaq is now 1.84% on the week. All four U.S. equity indexes fell sharply late this morning and early afternoon as Treasury yields surged, with the 10-year and 30-year yields climbing to 4.95% and 5.09% respectively, revealing investor concerns about rising government borrowing costs and even renewed inflation pressures. Despite this, the CME Fed Watch tool still shows markets pricing in 4 rate cuts through 2026, but the market has delayed the first cut into September of this year. It was all the way as early as June and July previously. At the same time, uncertainty surrounding President Trump's proposed tax cut legislation has bothered stocks as the bill faces significant resistance from within his own party, particularly over potential Medicaid cuts, and the big one seems to be the threshold for the SALT tax deduction. That's a state and local tax deduction. The lack of clear consensus among House Republicans has increased fears of political gridlock and the prospects for stalled fiscal policy. This tax cut is really part of the bigger picture for the President and Treasury Secretary Bessent, and the potential impact on the federal deficit and economic growth is hitting the NQ as well as hitting the other stock indexes. As a result, both the bond market and equity markets are reacting to heightened political economic uncertainty throughout today.